You're listening to the SBA Loan Experts Podcast, your source for information, tips, and education on the SBA loan program from SBA expert Chris Hearn, founder and CEO of Fountainhead, the nation's leading non-bank SBA lender. Here's your host, Chris Hearn.
So we want to do a webinar, try to help our referral sources like you to have a good end of 2021 and really to get yourself jump started for 2022.
Someone asked if they have a client that actually was funded with us a few years ago, if they were to bring that client back to us because they'd like to buy their building now.
Yeah.
Even though they already have a loan with us, would they still receive that referral commission? And I think the answer to that is a resounding yes.
Yeah. We want to protect our brokers, Matt, and right. Those of you on the call. So if you bring them back to us, then absolutely. If they just come to us and they just, because we're their lender and want to do another deal and they don't bring you into the equation, unfortunately, we don't pay a referral fee in that situation. And it's really because it's down to how much value you bring to the borrower. And you probably hear that a lot from us, which is we are very, very supportive of our brokers, our loan agents that we work with, like you. We protect them. But at the end of the day, if the client who is already a borrower of ours, if they come back to do their second or third deal and don't include you, they are our client at that point. And we would say that you haven't brought value to that new opportunity. So, that's a situation where we wouldn't pay. But fortunately, I'm telling you all, and you'll hear this several times, this is why you want to stay close to your clients, because you want them to think of you first when they need financing. And then obviously we want you to think of us first to bring them to us so we can finance them. So that's important. I've been teaching loan brokers for many, many years. That simple strategy, you've got to demonstrate your value so that the borrower will come back to you again in the future. So it's really important. But yeah, we will protect you if you're bringing them back to us for their second or third or fourth loan. And we've had many brokers do that actually over the years.
So Prim had a question. In terms of the fee, how do you suggest they approach that with a borrower? What do they tell the borrowers in terms of fees? How does the broker approach that? That's a great question.
Yeah, so I was actually on a panel last week in Las Vegas at a national commercial loan broker conference, and I somehow had to talk about this. I called my session "How to Keep Yourself Out of Jail If You're a Broker," and also not get a $250,000 fee. So fine, I should say, not fee. Sorry. Didn't want to get you all excited there. $250,000 fine.
All excited about a $250,000 fee, not so much.
Yeah, that's right. Big change, very different F word. So what I would tell you is there is something called the two-master rule within SBA lending, which means that you can only get paid by the lender or the borrower direct. Now, there is a way around that, and I use that loosely. You should think of getting paid by us, the lender, particularly as Bob and I have said, this is the most lucrative referral program in our industry. But you also need, if you want to also get paid by the borrower at some level, well, you've got to give them some services for that. So you can be a consultant to that borrower, and they can pay you what you work out, but you're going to have to produce some results and some value for them. And it's got to be defensible. So you don't want to just conveniently you're making 1% of the loan amount from the borrower. That's not going to cut it. SBA can come after loan agents. They can ask you to justify the fee that you got from the borrower directly, especially if you're getting a fee from us as a lender. So you want to be careful with that. My strong suggestion is if you're trying to get it from both sides, be very, very careful. Probably bill hourly. Make sure you keep good records on this just in case. So don't try to, for years, I've been doing this for 20 plus years and Bob's been doing it probably 30 plus years. We've seen it both ways. We've seen brokers get paid on each side, but SBA is very sensitive to that these days. And frankly, borrowers have always been sensitive to that. So you want to, as the expression, pigs get fat, hogs get slaughtered. You want to make sure you're not overly piggy on this, and you want to be defensible if you're providing consultative services to that borrower, so that you can get paid on both sides. You just got to be careful about that. We don't like people double dipping unless they're providing value, and SBA clearly doesn't like brokers to double dip. And this has become a bigger issue within SBA lending of late. In fact, they've bulked up their resources to ask lenders to provide documentation on the form that's called the 159 form. They provide the broker applications on the brokers they've approved, and they actually can reach out to you as a broker or loan agent and ask for information from you as well if you were paid as a result of an SBA loan they're funding.
The follow-up to that, though, would be, does Fountainhead disclose the fee we pay the referral source? Do we disclose that to the borrower?
We don't.
Right. And that's
We
huge. So that's not in the settlement sheet at the closing. So the borrower will not see the amount of the fee you're getting from us.
right.
All right. And then Prim had a question regarding the guarantee, asking if we could explain the guarantee a little bit more.
Sure.
And kind of how that affects the borrower-lender relationship.
Well, I don't think it necessarily affects the borrower-lender relationship per se, other than it makes us have a broader credit box. Okay. So, for instance, we've been talking a lot about business acquisitions. If you sent a business acquisition deal to your local bank, you are absolutely going to be wasting your time, because local banks, or any banks for that matter, they're very, very reluctant to do business acquisitions conventionally. Now, if they're an SBA lender, sure, maybe they'll consider it, but not always. But business acquisitions are just simply not done for the most part conventionally. Or if they are, it's because it's a much larger enterprise value of a company that may be acquiring somebody else. But at that point, they've got probably tens of millions of dollars of value that they can justify in the business. They probably have millions of dollars of free cash flow that they can rely upon. And there's all the other, and frankly, a conventional bank is going to probably request a very large down payment, 30 to 50% to even consider doing that conventional. So that's why business acquisitions are just not usually financed conventionally. They just aren't. So, yeah. But the guarantee, so as it stands right now, an SBA 7A typically gets a 75% guarantee on that for the lender. That's very helpful. That's what helps us to maybe stretch a little bit farther on some deals that if we were doing it conventionally, we wouldn't. On the 504 side, there's 100% guarantee on that second lien. There's no guarantee on the first lien, so something to consider. There may be the version of the reconciliation bill, the last version that I saw last week, actually has a stipulation in it that would allow for 90% guarantees on 7As, as well as waiving borrower fees, the guarantee fee. That did exist earlier this year. It ended just before September 30th when they ran out of the allocation. But that was part of the government relief efforts earlier this year to allow 7As to have a higher guarantee, as well as to waive the borrower fees and the lender fees. That went away, but now they're talking about bringing it back. So we'll see. It's Washington. Who knows where things are going to shake out, but we'll see where it goes. But obviously, if that happens, that would probably result in a lot more SBA lending, because fundamentally, lenders don't like risk, and this is one of the most effective ways to mitigate risk for a lender, but also to provide the borrower with better terms and conditions for their business financing needs. Sure. So that was actually what we pitched this to you all about, but I think it's been helpful to go over the last hour or so over sort of what's different about us, what our credit box is, what you should or shouldn't be able to do, our process, all that sort of stuff. But yeah, I'd love to transition into that. The bottom line is you can still send a deal to us probably in the next week or two, and we can do everything we can in our power to get it closed by year end. Once you go past about mid-November, because of the holidays, and because some of this just takes a little bit of time, it's going to be tough to get that transaction done this calendar year. But this is always a great time of year to start planning ahead, to set yourself up for success for the first quarter of 2022 in this case. So some of the ways I've seen brokers over the years, and again, I've been teaching brokers for many, many years about all these different things, but working with business brokers, working with commercial real estate brokers, working with franchises. And there's a lot of franchise concepts out there who just don't want to be involved in the financing process, and they'd rather turn to somebody who's a commercial loan broker who understands their brand and who understands the landscape of potential lenders. They'd like to outsource that to you. All this stuff, by the way, is conditioned on the fundamental fact of outsourcing, right? Because a borrower could walk into a bunch of different bank branches and solicit them to try and get their financing, but that's probably not the most effective use of their time. And that's why they turn to folks like you. It's no different than buying a house. I mean, yeah, you can buy a house for sale by owner, but most of us know that it's probably going to take a realtor to be involved in that process. Same thing with a business acquisition. I suppose you could walk into an office park and start offering to buy people's business, but it's probably not going to be real successful for you to do that. You want to probably work with the business broker. So I've always believed this is where you've got to show your value, okay, and demonstrate how you're different, and really make sure they understand that outsourcing the execution of their financing to you is a really valuable idea, which really allows them to get back to doing what they do best. Okay. So you sort of have to cross that threshold first and foremost, but I think that's a great way to drum up some business. Obviously online, you can do a whole variety of things, and Matt could probably speak for hours about different online marketing strategies that you can do. I think it helps these days to be active on social media, particularly LinkedIn, just because that tends to be more business oriented. So, and if you're not following us, you should probably do that. We give a lot of content out there. Just there's a variety of different ways to go about drumming up business. But those are some of the best ones I've seen. And what I'll tell you is, there's a lot of people. It's kind of like that idea of that concept of, there's millions of ideas. It all comes down to execution. I think all of us understand that. The same thing applies here. There's thousands of lenders you could take a deal to. You want to be very particular about who you send a deal to. Okay. There's, millions of different ways to get businesses in your pipeline, but you want to work with people that value you. You want to work with people that have a concept that is financeable, or a transaction that is financeable. Which means sometimes you got to say no quickly. The Sam's cryptocurrency. I got a cryptocurrency mine operation. I'd like to get SBA financing for it. That's a hard no. It's a quick no, and you can move on to the next one. Okay. So, and I know that's difficult for people to hear because, at the end of the day, we're all salespeople, right? Especially you guys who are commercial loan brokers. So, you don't want to say no to something necessarily because it could result in another referral fee, but you got to be smart about it. There are certain deals that are just not going anywhere. I always call them credenza deals because they've been sitting on somebody's credenza collecting dust for months, if not years. Those are not the deals you want to try to send our way, because we're probably going to have a tough time getting them done, just like anybody would. Believe it or not, your local bank or credit union is going to be a very good source for you. They're always reluctant to send a transaction to us. I think it's kind of short-term thinking, because we're not trying to get anything beyond the loan. So we actually have a number of sophisticated banks who send us their turn downs, but a lot of the lesser sophisticated, smaller institutions would rather send their turn down to somebody like you, knowing full well that you're going to turn around and maybe send it to us. But at least it gives them sort of some sort of separation there to some extent. And again, calling on these bankers, you're going to simply say, look, there's going to be some transactions that you really believed in, that you took to loan committee, that lost in loan committee by a vote or two. Those are the transactions that you should be sending to me, the mortgage broker, so that I can help your client, get them taken care of, because I have a stable of lenders who probably would be interested in that. So that's another way I would do it.
Today's episode is brought to you by Fountainhead, the nation's leading non-bank SBA lender. Fountainhead's team of SBA experts will guide you through every step of the process and get your loan closed faster and more efficient than any bank. Apply today online at FountainheadCC.com. Thanks for listening, and we'll see you next time on the SBA Loan Experts Podcast.